right. Greed works.
Hello everyone and welcome to episode 20 of Let's Play Wall Street Raider. I'm RakeM, your host. And today we're just continuing our journey toward Profit Town with all of our stocks. We have pretty much all of them dialed in at this point. We'll come back to Browning Ferris in just a second. But pretty much all of them are positive now in their earnings. There are only two left that aren't. And one of them is Goodrich, which has been ailing and its management's been terrible. And the other is ZDNet, which we only just acquired and gave it assets and put it in the oil industry. So it still needs some time to get some seasoning. But pretty much every single one of these is coming along nicely. We don't have any with any credit rating lower than A. So they're all doing well debt-wise and performance-wise and everything else-wise. So we're mainly going to be watching our earnings reports and going to each one. And the focus today is going to be on two things, our commodities. We currently have... Oh, let's go to me. We currently have shorted wheat and corn. And so we want both of them to go down to about the $5 to $6 range at a minimum. It would be nice if they went down to the $4 range, obviously. But anywhere from $5 to $6 a share, $5 to $6 is the perfect price for us. Other news, we have a lot of cash in various places that needs to be put to work. Primarily by Zurich, but also Swiss Insurance has some excess cash that it needs to invest somewhere. And the interest rate isn't quite high enough for us to invest in government bonds. They're both trading above 100. So we'll need to be creative, and I think what we're probably going to do, if we can find enough of them, is we're going to find some stocks in the database that are giving off some decent dividends and looking to invest our money in those. Now, we won't seek to buy a controlling interest in these companies. We just want to invest a good portion of our dollars and have a better return than just the return that comes with having CDs. So that's the plan. We don't really have anything else that we have to address, because once again we've got pretty much everything taken care of. I have our spreadsheet with our target prices over here to the side, so as we go through the earnings reports I will double check and see if any of the stocks that we're looking at have reached their target price. May not do a lot of fast forwarding today because we're going to be buying a lot of stuff, but there shouldn't be. I'm not anticipating any problems. So without further ado, let's get the stock ticker started and let's start addressing these earnings reports. First of all, with Browning Ferris, his earnings are still going up. So let's apply this extra money toward his loan. Okay, and Browning Ferris is the one that's trading closest to his target price. His target price is $4.87. So, we're going to keep a very close eye on him. Is he over here on my list? He isn't. Alright, let's get rid of Arabian and get... Alright, Volkswagen, we'll come back to you in a second. So let's get rid of him and go put Browning Ferris on here so that we can watch it. Okay, $4.87. That's the price we're looking for. And we've just got Daewoo Motors. And Daewoo Motors is in the Asian auto industry. We just sold off Mazda out of there. company. Alright, so here he is. 16% return, too much debt, no dividend, and no R&D. So we can leave this at negative 10, jump our R&D to 7, give him some money. He's already reasonably competent, so if we just get the debt under control, he should be fine. So that's 8, so we want to get this down to 2. So we need to give him 3 billion. Okay. So that's good for now. And I think we want to go ahead. We talked about giving Irish Life some of these other stocks. And I think it's time we do that. We need to open up some of these slots for bankruptcies, because with those interest rate swaps now taking money from 700 companies, we're going to see another barrage of bankruptcies come our way. So let's go ahead and transfer these stocks to Irish Life. Edison here earned 81 cents. He's about to lose money. Well, let's see what's going on there. Could it be because of our growth rate? We're very incompetent. We're going in the wrong direction. Very incompetent. Wonder why that happened. Alright, well, let's just change the managers. Alright, let's go back to the bank. Still need to give Verizon and Southern Edison to him. Okay, and now with his dividend yield down, I think we can raise it. So let's raise our dividend to the maximum, 3.61. Okay. That looks good to me. And now the bank has 12 slots now that it can receive bankruptcies in. Okay, I think now's just about the right time to go ahead and buy some futures of the stock index. So we're going to interrupt what we're doing with the with Zurich and all them, and I just want to look at this. It's dropped quite a bit. It's dropped over 20% in the last couple of months. So I want to see what kind of price it'll give me if I try to trade futures in it. Wow, that's pretty high. I guess there's still quite a premium on it. Of course, I mean the GDP growth has been going up. It went from -8 to 2.1 in the last couple of months. I don't know. This is an awful big jump. I mean, it was just there. You know, it was up to 22.5 just 2 months ago. But I guess I'll wait since this line's all the way at the bottom. See if it goes down anymore. Alright, so getting back to this cash that we need to do something with. Zurich Life has $2 trillion that he needs to invest somewhere. And he has 10 stocks. So if we're going to give him more investments in stocks, we need to get a holding company to hold them. So let's look for a company that we can buy and just hold as a shell. Okay, there's none under 100 million. None under 200 million. But there's 2 at 300 million. Alright, so let's take a look at Sigma. Oh wow, there's some reasonably priced stocks here. Grace and GLC, even Eastman Chemical. That's 49, Ford, that's 50 right there. So what if we got Grace, IMC, and whatever this one is? That would be 47%. Where's Sigma? Right there. Alright, so let's buy Grace, let's buy IMC, and let's buy Sigma. And we'll have Swiss Reinsurance be the parent, since he has $200 billion to spend. So we'll have him buy these two these two. And then we'll have Zurich buy Sigma. Alright, so let's do that. So Zurich Life will buy Sigma. Okay. And Swiss Reinsurance will buy Grace. And also, what did we say, IMC? No, we'll buy, no, he's up, so we'll buy IMC. Okay, let's buy the other 2% of Grace. And he's got a decent return, so we're going to have to offer like 32%. Alright, they accepted it at 30. Alright, now let's give him IMC. Cancel interest rate swaps. Alright, now let's see what we need to do for him. We need to get his debt down to 3.5. So we need to give him $3,500. Wow, those are some high interest bonds right there. Alright, let's buy those back and then put the rest on the loan. Alright, now management wise, we're at -8 and 4. Return is great. So what's our management? Capable. Alright, let's set the R&D to 6. Set the growth rate to 1. And set the dividend to $1. Okay. And now let's buy the assets from Sigma. $700. Okay, there's some other assets for sale here. Okay. That's a little high, but we're only growing at 1% and we got a 20% return, so we'll just pay it down with our income. Alright, so Sigma will be the recipient of whatever stocks we decide to buy for their dividends. But we should probably check and make sure that there aren't other industries like this one that are ready to be taken over. Actually, this is too high. Let's go ahead and grow negative. We'll grow at -10. Slim down a little bit. Get down to 40%. Or even lower, like 36. So right now we have 42. And we want to slim down a little bit and increase this rate. Nobody else here has credit. Well, he does. But that's it. So, alright, let's go look at our industrial growth rates. We haven't been out here in a long time. Alright, so beverage is supposedly doing well. But we sold off FEMSA bottling. We already have investments there. We don't have any in engineering. We don't have any in pollution control. Alright, let's look at engineering. Aoki. And Hazama. These guys are all running out of credit, so they can't grow because they don't have the money to do it. Not that the growth rate's real big, but these returns are nice. Let's see how big Aoki is. Well, that's not very big at all. How big is this guy? Wow, look at that markup. So, I don't know, I mean, it's kind of small. Let's look at the other one. Pollution control. Oh, that's where Browning Ferris is. Okay, never mind. Let's see, what else is big that we're not in? He's decent sized. Wow, he bought up a lot of our cast-offs. And he's losing money as a result. It's got a nice return though. Oh, I'm not sure. Let's see. His stock price is down from when we sold him. Got some good returns in here. But it's not a lot of money. So let's keep looking. While we're here, let's take a look at Goodrich, because he needs some attention. We are spending a lot of money on R&D, and he seems to not be doing any better. Of course, these guys are growing like crazy too, and we froze them. So how they do that is anybody's guess, especially with these low returns. I think we're going to have to write off some of his assets and do a restructuring here before he'll improve. So let's change his growth rate to -10 for starters. Alright, and let's do a restructure. And we'll write off 3%. Grossly incompetent, and our debt's fine. So, just need to turn his management around. Okay, what was the other one that was negative in here? That's Goodrich. Southern California turned around the wrong way for some reason, and then it was ZDNet. Okay, so let's just check on him real quick. Competent, and the industry is worsening. That 21% growth rate just disappeared. Okay. Well, we're competent, so we can back down our R&D to 8%, and that should bring us up above 0 on our return. Well, right at 0 anyway. And Exxon is growing like crazy. What did he do? Issue bonds? All right, let's grow. Let's grow at -3. Just until our return comes up. Yep, that looks good. We'll go with that. I mean, we have a cushion here. That's what it's for. And, you know, I said that these prices might come down. I didn't expect it to be this drastic. And some of these are going to go broke too. Conoco and Phillips. Okay. Let's do a database search, because I'm not finding anything that I want to invest in this way, despite all the earlier indications that it might be the best way to go. So let's look for ones with dividends and that are publicly traded. And we want to invest as much as we can. He's got 200 billion. So let's look for ones between 20 billion and half a trillion. Or actually, any 20 trillion and up. Fine. Okay, there's one result, and that's UPS. So we can put 4 billion here. Okay. All right, let's go up to 105. Nothing. 110. Nothing. Still nothing. Alright, now we got a second result. Glaxo. Now we just re-entered this industry, and that's him right there. So he's got a good return, and we're reforming this industry, so his stock price should go up too. Alright, so that's good. So let's go back to Zurich. Alright. Alright, Petrofina. Alright, let's lower this to 4% and see what we get. Now there's 7. Alright, I bet you AT&T is a good size. Oh yes he is. Alright, so he's losing money right now though. Let's see his industry. Here he is. Wow, his stock price is really low. I wonder if Citigroup would be willing to give him up. Who owns Verizon? Irish Life, right? Irish Life has the money to buy AT&T. So let's see if they'd be willing to sell AT&T for a 25% markup. Because if so, we'd be getting a bargain. Oops. Went too fast. Alright, well, it's inadequate. So he's all the way down to 73%. Let's offer him 30. See what they say. Alright, well, I don't want to go any higher than that. Alright, let's think about this for a second. He's trading at 651. And if we offer 35% premium, that's still below his net value. So if we offer 37%, let's offer 37% and see if he goes for it. Alright, he accepted. Cool. Alright, let's buy the other public shares. Okay, and apparently AT&T owns Sears. Well, he owns Bell South, which owns Sears. So we now have a monopoly here. We have to decide which one to keep. And I think we should sell Sears simply because he's the larger of the two and already has monopoly antitrust suits against him. Down here. So let's have BSO sell Shield, Sears Holdings. Apply all that toward his debt. Okay, let's liquidate him into AT&T. All right, now he's mediocre, and we want to go ahead and merge these two. That'll improve his debt situation. Alright, still mediocre. But we can fix that. You know, his credit rating has improved to BBB. Alright, let's see how much Irish Life has that he can give him. So he can give him the whole thing if he wanted to. Well, almost. AT&T owes $160 billion. So the question is, how much of this do we keep in reserve? And I think we better keep $25 billion. So let's give him 124. And while that'll take us well below our 3-to-1 ratio, you know, it's more like 9, 10 and a half to 1, 11 to 1. He's going to need it because he's currently growing negative. Alright, let's see what we want to do management-wise. Growing at -5, so we're going to change that to 3%. R&D at 10%. and we'll eliminate the dividend until he starts making money. Okay. Could probably pick up SK Telecom also, if he's not wholly owned. And he's not. All right, and on this one, I'm just going to have AT&T buy his assets. And let's do the same with Japan Telecom. And let's cancel those interest rate swaps. All right. So now he's only losing negative 13, so that's up from negative 83. And just going to make sure there's nothing else we need to address here. So that looks good. Okay, so we get the management up, our return will go up, we can resume paying dividends, and our stock price should go up as well. And if we want to, we can get Alcatel as well. But we're going to wait, give him some time to reform his management, and then we'll think about adding more assets. We've already got 33%, so there's no need to add more. We want to be able to grow organically and raise this price, so... Alright, so we still have the problem of too much cash at Zurich that we need to address. wrong one. So the question is, since we're kind of running out of stocks to invest in, I mean, we'd have to basically, when we bought 80% of the market, we only spent $2.5 trillion. And so we're already in, there's only 20% of the market left. So there's really not a lot of places, or not enough places to put all this money. So with the interest rate climbed now to 9.5%, and these bonds paying 8% where most dividends are 5% or less, even though I don't like putting it in here with this price as high as it is, it really is the best return. So I'm going to go ahead and spend the rest on government bonds, and that way it's invested somewhere that has a decent return. So I'm going to do that, buy all the bonds I need to get this $2 trillion invested, and then I'll be right back. Now I'm going to do the same thing for my cash. I'm going to buy a whole bunch of government bonds, and then I'm going to donate those to SDI. And when I get done with that, SDI will be short on cash. So I'm going to have it sell off all of its loans in the consumer and mortgage portfolios, and then have it buy bonds all the way until it has just $1 trillion left. So I'm going to go ahead and do that, and I'll be right back. Okay, just a couple more and then we're done. Alright, that should do it. Alright, so we've got $1 trillion in cash and $10 billion in loans and bonds and $5 more billion in stocks. So that's good enough. And I'm not sure if we already got our, yeah, here it is. 88 cents a share, so slightly down, but next quarter, 203. Okay, so I think that's going to do it in terms of the uninvested cash. So Irish Life has more cash now because of the interest rate swaps. Oh, here it is. It's the second quarter. My mistake. So we made 251. That's great. 251. The estimate was 203. And next quarter. See, we just had a huge loss, and now we all of a sudden have a huge gain. While I was buying bonds for Zurich, I think, right when I got done, we got the notice that stocks were down. And now all of a sudden they're back up. All right, let's have Irish Life buy some bonds also. All right, I'll be right back. Okay, I think that's all of our cash invested now. Let's just double check. So, all that looks good. Does Swiss have bonds? He could put some more money in bonds. Let's do that too. I won't have to fast forward. He's not going to buy that many. Just have to do this 10 times. Okay, so let's see. Let's turn the ticker on. And we got a few more negatives now, but oh yeah, let's deal with the holding companies. All right, so SK Telecom. All right, we want to put him, we want to do one of two things. We want to either liquidate him, and since he's underpriced, we're just going to liquidate him. All right, and the other one as well, Japan. He's underpriced also, so we'll just liquidate him. All right. 411 this time, up or down from 518, but that's all driven by the interest rate swaps, and the interest rate is up. So, we already dispersed that cash, so that's all we need to do for him. We just have to wait for the next round, which according to this is going to be way down. I don't understand why that interest rate hasn't gone down some more. It's neutral again. I missed that notice. So I guess it's going to hover in the 9% range until it goes to easing again. Alright, Nissan's flat, but still up from last year, and still going up, so that's good. Let's pay off the rest of his loan. And still growing at 10% because we have a great return. Mumbai Automotive. We may want to add him once we get a little bit more cash. He's losing money, so his stock price is going to stay below 100%. with as volatile as this guy's stock price has been, and we're back to getting that error again. With as volatile as his stock price has been, we should probably, when he gets back up to his peak, when he gets above 260, we should probably sell 10% of him and take advantage of the options, the stock options. Where is he? Here he is. 208. Okay. All right, Devin's very capable, so we're going to back his R&D down to 6%. Supposed to make money next quarter, and it'll be for enough to wipe out all of our losses. And we can grow positive now. So let's grow it 25%. Okay, and with this down, I want to see about trading the, see it went all the way down to 12.8 and it's going back up. So let's see what kind of a markup it'll give me. Boy, that's still pretty high. That's a 60% markup or 50% markup. I think I'll wait until we get the notice that the interest rate is easing before I do that. Because I mean, I trust it to go up. I just don't trust it to go up to 18,000 with the interest rate this high. All right, Alcoa is up. No loan. Let's see if we can have him grow bigger. Nope, still got Southern Copper here. So we're going to have to wait a little longer. All right, Nippon is down a little bit, but going up next quarter. %, that's good. All right, Fuji is up and still going up. Alright, let's see. What is our price to sell him? 171. So we're not even close, despite this markup. Alright, Goodrich, our problem child. We increased his R&D and changed his management, and he's still grossly incompetent. Alright, gotta give him some more time. Airtran is down slightly and still going down. Reasonably competent. growing at -2. And I see no reason to change any of it. We could up the R&D to 10, but the industry's growing negative, so it's not that important right now. We could add these, but there's no real reason to yet. Let's just wait. And we just got Alaska Airlines. Okay, Sumitomo Rubber's up. And let's see if we're going up again. Yep, going up again. We're very capable now. But R&D is only 6%, so we'll just leave it. Okay. Dow is up. And still going up. Quite a lot, actually. We can back down his R&D to 6% now that he's very capable. And everything else we'll leave alone. Our price on him to sell him is $162. Alright, Pfizer's positive and going up. Very capable. Alright, so let's see if we can grow now. Yeah, we can grow. We don't want to grow a lot though, because the returns are still pretty small. What's our market share? 39? Alright, let's give it one more quarter. Give it one more quarter and then we'll grow at like 5%. Alright, Lenovo's up. And still going up. Got a lot of cash on hand, so let's see if we can grow. We're already growing at 10. We're reasonably competent. Let's see what IBM is doing. They got a huge loan. And yet they're growing at 12%. I think we'll just leave it. 10%'s enough. He may be making 31%, but he's paying 10% on 75% of his assets. then he's paying out a 4% dividend. At this price, he's going to go broke if he doesn't change that. Alright, Microsoft is flat and still down from last year, and still flat for next quarter. Alright, we may be growing too much here. We're reasonably competent. So I'd like to get to very capable before I back this down too much. So we're making money, so I'm just going to leave it until next quarter. See if we can get to very capable status. And I think I'm going to back down the growth rate to 15%. See if that makes us improving. No, not quite. Alright, I'll back it off to 12, but that's it. Still deteriorating, but that'll just have to do. We need to get up to very capable there. Alright, we've just acquired the New York Times. Okay, and News Corporation is way down. Let's take a look at this industry. Oh, there's our culprit right there. Alright, so here's News Corporation. And New York Times is way down here. Let's see what he has. I don't remember if we froze him or... No, he's got a bunch of cash. He is frozen, but he has a ton of cash. What is his current? He's already got 50%. Okay, so we just sold some assets. Alright, we need to have him grow negative, and him, negative 10. Have him grow negative 10. Knock down the R&D, and not try to make any money right now. Just make Time Warner as big a market share as we can. And probably ought to pick up some of these smaller ones, so that we can all sue him when he hits 52%. But their prices aren't going to go anywhere but down, so I guess we don't have to do it right now. We can wait. Alright. Growth rate negative 10. Okay, I'm going to set the R&D for 4. And I don't remember, I don't think we have any dividends. Okay, so he does, but he doesn't. So we're going to eliminate those two. Alright, now when he reaches 52% market share, we will sue him, and we'll get as many companies as we can to sue him as well. Alright. Kraft just went bankrupt. Luckily he wasn't ours. Alright, Hormel is flat. slightly moving downward. Alright, we need to see if we can sell this subsidiary. And the answer to that question is no. Look at him. We froze him and he's still growing at 39%. Oh, we didn't. He changed banks. He changed banks. Alright, let's buy his loan. And freeze him again. Alright, we'll look at Warner Brothers in just a second. Looks like there's a lot in here. So probably be more than what I can buy because I only have 200 billion in cash. All right, so Goodrich we want because he's ours, and General Mills. You would think he would have, since he only owes two billion, would have a good credit rating. There it is. All right, let's see if there's anybody else here that we want. Probably take Ziff Davis. He's in publishing. Okay, I think that's it for now. We'll take Cumbo too. He's in the rubber industry. Alright, now let's freeze General Mills. And let's go look at Warner Brothers. Growing at 15, and he's only got a 15% return. Let's drop our growth rate to 7%. Very capable. Nope, we're still mediocre. Alright, so we'll just drop the growth rate to 7%. And was it Warner Lambert that was going down? Yeah. Okay, growing awful fast in a negative industry. So let's drop the growth rate down to 6. We're very capable. That's good enough. Get up our R&D to 6. Oh, brother. The returns are down and everybody's growing like gangbusters. I mean, they don't have a lot of credit left. So, I mean, it's not like these growth rates can really hold up. So he's almost out of credit, almost out, almost out. These two we can freeze because they still have plenty of credit left. Alright, so who is this? National Grocery and Discount Markets. Alright, so Discount Markets. Helps if you hit the right key. Okay, and National Grocery. Alright, anybody else? Stop and Spend. He's almost out of credit, but this guy's not. Foodland. British American Tobacco's up. Alright, I'm going to leave the rest of these alone. And as far as our growth is concerned, let's see if we can back down our R&D. Alright, we can make it 8. Alright. We'll look at you in a minute. So make R&D 8, and we'll back our growth down to 1%. Alright, Warner Lambert's up. And we just got Gillette. Okay, let's look at Imperial Tobacco first. He's got some pharmaceutical stock. Or no, this is biotechnology. Wow, this is ripe for a takeover here. Look at all these great prices. How much is Millennium worth now? 40 billion. Of course, that's with his 34 billion worth of subsidiary stock too. Great returns. Okay, who has we got to look and see who has the most money. Alright, so everybody's running low. ZDNet would probably be the best one because he has the fewest stocks. Or, oh, I was thinking Zurich. How much money does Zurich have? Only 38. So I guess I'm the one with the most cash. Asian Pulp and Paper we just got. Alright, Alright, so Zurich Life has 9, 10, 11. And we could add one more. Or I could buy them and give them to the bank. And then give them to either Swiss or Irish. Alright, Swiss needs another stock, so that's where it'll go. Okay, we're going to end the episode here, and when we come back in the next episode, I'm going to take over the biotechnology industry, or buy up about a 30%, maybe 40% stake, and then transfer those assets to Swiss Reinsurance. But until then, thanks for joining me. Hope you enjoyed the episode. If you did, please like and share. And until next time, have a good one.